There are so many people on the fence about buying a home for many, many reasons. And one of those reasons is they just don't feel like they have enough cash saved up for a down payment. And another thing is change. Change is difficult. But oftentimes, if the potential buyer is educated on the different programs, they find that they are actually qualified. There is one specific program that I'm going to talk about today, just because there are so many people that are unaware of this program, and I feel like it could benefit so many potential home buyers that have no idea that this program exists. Okay, so we're going to go over NACA. All right, so a couple of things. NACA is a very unique program. There's not another one like it in the country. Now, I will say that NACA is not available in every state. So you can definitely go to the website, and it's www.naca.com, NACA. Okay. So let's talk about some of the benefits if you're going to be using the NACA program. Then we're going to go over what the requirements are, and then some other little additional items. If there's any questions about this program, feel free to reach out to me. I'm Amanda Smith at North American Title. My cell phone number is 702-302-1022. But honestly, the best way is to go ahead and sign up for the class if you're interested in this, because it's going to go over all of the different circumstances. You can ask questions during the class. So it's really, really great and very informative. Okay, so I'm just going to go over some of the basics. So what are the benefits of using NACA? Well, number one, there is no down payment, okay? There are no closing costs. There is no PMI, okay? So PMI is the mortgage insurance that protects the lender. This is very, very unique because there's no other programs out there that if you're not putting 20% down, that you don't have to pay PMI. This is the only program. Perfect credit is not required, so they do not consider your credit score. Now, there are some things they're going to look at in your credit, which is super important, and I can go into that a little bit more. If you buy a home that needs restoring, now this is really, really awesome. If for some reason you buy a home that does need some renovations, they will not have your payments start until those renovations are completed. So up to 6 months, let's say you buy a home and now you're wanting to renovate that home, and also they will help you pay for some of those repairs up to your loan maximum. And then you do not have a payment until those repairs are complete. So that's pretty cool. And then also one huge benefit about using NACA, and again, this is very, very unique for a program with no PMI. So most programs, let's say if you got a home, a down payment assistant program, right? So that was not the right verbiage. So typically what happens is if I use a down payment assistant program, they're going to raise my interest rate. Okay, so there's the baseline interest rate, and different programs you use have different interest rates. FHA is typically a little lower, conventional a little bit higher, and then you put the 20% down, you don't have the PMI. With this program, not only do you not have PMI with not putting any money down, because you're not putting any money down. This loan program does not cost you anything at all. We'll go over what the minimum funds you do need to have are in a little bit. You can buy down the interest rate. So not only are you getting the lowest interest rate, but then if you did save up some money, you can use that to buy down the interest rate. That is super, super cool. Actually, they do some testimonials during the class, which you will hear, and there's some really cool situations where, somebody bought like a fourplex and then they rent out the other three, and they bought down their interest rate, so they essentially have zero mortgage payment for their living in the fourth complex. So pretty cool. Okay, so the next, what are the requirements? So with any program, there's going to be some requirements. And for this one, the number one thing you have to do is take that 4-hour class. And like I said, it's so, so informative. There's a great instructor. He's upbeat, he's funny. And so it's definitely worth your time if you're interested in this at all, or for somebody else. Realtors, I encourage you guys to take it as well. And then let's see. You cannot own a home currently. So when you close with a NACA home, you cannot already be a homeowner, okay? You do have to sit with the counselor after the 4-hour class. Then you do have to do this, what's called an intake session. They're going to go over all of your information, make sure you're a qualified homeowner, because they're not making you pay a PMI. So keep that in mind. What is the drawback? What's in it for them? Well, they want to make sure you're a qualified homeowner because they're putting their butts on the line. The PMI is essentially to protect the lender. So in this case, they're taking away that protection in case something happens to you or your job. So they just want to make sure that there's consistent income. They want to make sure that you're not consistently late on bills, rent, things like that, okay? So the other downfall of this program is that it does take a little bit longer. So any traditional program that you're going to go through, which you're paying PMI, by the way, you can probably close in 30 days, sometimes 40 or so, right? The cash is super fast. Well, with this program, they're going to watch your finances for a couple of months, but totally worth it if you have the patience to do this, okay? They're going to go over your statements with you. They're going to make sure that you're not overspending. And then they're also going to determine whether you're priority or non-priority. With those, that actually determines where you can buy. Now, it doesn't necessarily mean you're only, if you make over the median income, that you're going to have to buy in terrible areas. It all just depends on, they have this graph, and then you look up a home, like one side of the street could literally be non-priority and the other side could be priority. So it doesn't necessarily mean, anybody that makes over median income has to move into areas that they don't want to be in. Okay, so just you work with the realtor with that, and they will tell you what areas you can look in, and you can do it by address as well. Okay. A steady income for the last 24 months doesn't necessarily mean you have to be at the same job. It just needs to be steady income to prove that you're going to be able to consistently make these payments. Okay, let's talk about funds that you will need. Okay, so like I said, there's no down payment. The lender does not charge you any loan costs. So what funds will you need? So in the time that they're checking out your credit and watching your income and your spending habits, this is a great time to start saving for those funds that you will need, because there are still funds that every person as a homeowner will need. Okay, so but it's considerably less than what you would need as far as if you were getting a regular loan. So you're going to need your earnest money. So that's right off the bat. If you're going to find a home, you're going to say, I want this home, and it's a good faith. You're putting down $2,000 or whatnot, which, by the way, goes towards your closing costs at the end. So keep in mind that's all going to be together. Your inspection fee, because you do need to get an inspection on the home that you chose. And then you're going to have your homeowner's insurance. So at the closing table, homeowner's insurance is always 1 year in advance. Okay, so that's, I would say $500, $600 right there. So keep in mind, these are funds that you will need at the closing table, okay? Your prepaid. So you're going to have HOA, or if you have HOA, they're going to ask you to pay a prepaid amount, whether that's 1 month or 2 months. And then you've got your sewer, your trash that you're going to pay your prorated portion of, your reserves for your escrow account. So you have your insurance, and then you have your taxes. Both of those items, there's going to be a little bit of a reserve, and then you have your escrow account to pay those as you pay your mortgage payments, okay? And then you've got your title and escrow fees, so you've got to have your title insurance. And what's great about this is you do have all of these prepaids, much less than what you would normally pay with a traditional loan, because you're not having your lender fees and whatnots. Now, what I will say is you can also get seller credit. So, and seller credit can cover much of these items. So if you get a $5,000 selling credit, well, guess what? Now you literally came to the table with nothing, okay? That is pretty freaking cool. So like I said, this program does take longer, but if you have the patience and you have the ability to take your time to find a home and whatnot, this is a great program. And one other thing is the shock payment. So shock payment is basically what you pay now in rent. And then let's say, okay, for example, I pay $1,300 in rent right now, but I know the house I want to buy is going to cost me about $1,500, maybe $1,600 with the escrow account or so, okay? So what the shock payment is NACA is going to watch to make sure you can save that amount of money every month. So at the end of the day, when all of your bills are paid, I paid my rent of $1,300, I should still have in my account at that end of the month enough to pay the actual mortgage payment that I'm trying to accumulate. So that should be approximately $300 to $400 on top of what I was paying in rent. Okay, that's what shock payment is. So sometimes the length of waiting for NACA to approve you is based on, like, listen, you didn't save. You're not consistently saving the money that you would be paying in mortgage. So how can we give you a loan that we're losing out our PMI? We're trusting you. So essentially, sometimes the longer the wait is for NACA is sometimes your own doing, whether you're not saving enough money, you're frivolously spending, things like that. So if you have a client or you're a person who can genuinely say, you're not late on payments, you do make enough money for the mortgage that you are wanting, and you're able to save that money and prove it, you're going to be qualified really, really quickly and within a couple of months, and it's going to be easy peasy for you. Others, it might take a little bit of time. Maybe they've got some liens and judgments they've got to pay off, which NACA will work with you no matter how long it takes. You can set up appointments every couple of months if you need to. So it's a really, really great program. Like I said, just be patient with it. I'm going to go over. Now, NACA website has a lot of great information as well. Once you get to the purchasing point, they're going to have you do a purchase class after the first class. So that's cool. And I'm just going to go over the steps. Now, I kind of went more in depth with these things because this is, a program that takes a little bit of time. In addition to that, they do expect you to volunteer with them once you've gotten a loan. They want you to get the word out about the program. They want you to come show up at events and help. So number one thing that you have to do is go to the workshop. How do you go to the workshop? Go to NACA.com. Click on purchase at the top, and then there's going to be a drop down. In that drop down, you're going to go to events, and then in the events section, you're going to put in your zip code, and it's going to show you what events are local to you. Most of them are Zoom right now because they're still not doing the in-person. So super easy. It's a 4-hour class. Just pay attention because it's really going to help you when you're going through the qualifying process to know that information. Okay, cool. All right, number 2 is the intake session. That's the session with your counselor. They're going to go over all of your detailed information, tell you what you need to do going forward, reschedule a new one so that they can reevaluate that information. And at that appointment, they're going to tell you what you qualify for based on your income. And you can ask any questions that you need to, okay? NACA qualification is the mortgage pre-approval, basically. So once the counselor is done with you, they're going to submit all of that to get the actual qualification. Because when you get the qualification, that's when you're going to be able to do the purchase workshop and go house hunting. That's the fun part. That's super exciting. So that could take a little bit of time too, just because there are certain homes you can't buy if you are a non-priority. Priority means if you make under a certain amount, you can buy anywhere in the valley. It doesn't matter where the house is located or where it shows up on the map. Okay, that's what priority versus the non-priority. Purchase and sale contract, that's just the next step after you find a home. That's standard. That's with any program. You're going to do the purchase and sale contract. Then the property condition, which is where that inspection fee comes from. You do want to get the house inspected. NACA will go over that inspection to make sure everything's legit. If there is repairs being made, the repairs will actually be done after closing, and you won't have a payment until all of those are done. Okay. Then credit access bank application. They're going to have you do that again before closing. Then the mortgage processing is just the normal loan process. And then mortgage closing, that's going to be with us, title company. You're going to have that third party. You're going to get signed. And once everything is recorded, guess what? You're a homeowner. How exciting. And then the post-purchase, that is the last step, which is basically the financial assistance that they provide to you. Just want to make sure that you're still going to be a qualified homeowner. They want you to volunteer with them, all that good stuff. So that is it. So this is the NACA workbook that you get with NACA, and it kind of gives the summary of the cool things about NACA. But it's a great program. I am super excited about this program getting involved in more states because it could become the new norm for not having PMI. I think the PMI is great in certain circumstances, but if you're a qualified homeowner, you just don't have 20%, because let's be real. I mean, I'm a single mom with 4 kids, and it's tough to save that amount of money over a long period of time, or a short period of time. I don't want to wait 10 years to become a homeowner. you know. So anyways, like I mentioned before, I'm Amanda with North American Title. I hope this information was helpful to you. If you have any questions or you would like to find out more about our company, my cell phone number is 702-302-1022, and I hope to see you in the future.